Hi everybody. In this example, we are going to look at how to prepare journal entries and how to calculate and come up with the trial balance given specific transactions. So in the example, we have a person. He's opening a new shop. At the beginning of the month, he has $100,000 in cash and $200,000 worth in machinery, all financed through his savings. So it's a new venture. And in the very first month, in the month of January, he made the following transactions. He's purchased materials, some direct, some indirect, for $1,000 and $5,000 respectively. And he did it with credit on account. Incurred wages that are $4,000, $3,000 of which is direct labor and $1,000 is indirect labor, and we are going to see why we need to differentiate between direct and indirect labor in a second. Utilities paid is $500 and recorded depreciation for $2,000, and in the month he sold $30,000 worth of gear, all on credit, and cost of goods sold came in at $12,000. Selling and administrative expenses is $2,500 and are paid in cash. So let's start with the journal entries first. First of all, purchase of materials. Materials inventory will increase by $15,000, and it's on account. Accounts payable will increase by $15,000 too. Payroll is going to increase by $4,000. Cash is going to increase decrease by $4,000. Utilities is an expense paid in cash. Depreciation expense and accumulated depreciation is recorded. Sales is recorded, and all of it is on credit, so it's all goes to accounts receivable. Cost of goods sold, expense item, and finished goods inventory will decrease by the same amount. And finally, we have selling, general, and administrative expenses, $2,500 that is paid in cash. Now, these are pretty much the journal entries that you need to do to record all these transactions. Now, let's take a look at the trial balance. First of all, cash. Remember, we started with $100,000 of cash, and then we paid $4,000 for payroll, $500 for utilities, and $2,500 for selling, general, and administrative. So these in total is $7,000. $100,000 minus $7,000 will give you $93,000 cash ending. Accounts receivable is $30,000. Just like we have it here, all the sales were on credit. Materials is $2,500. Why is that? Because we are having in the inventory we have $15,000 worth of materials at the beginning, but then we are using $9,000 of direct material, $3,500 of worth of indirect material. So in total, we are using $12,500 in materials. That is leaving us the balance, which is $2,500. Working process ending inventory is given us here, so it is $1,500. Finished goods, there is a reason why I left it, why I highlighted this in yellow. This is something we are going to calculate, and there are two ways to calculate it. I'll come to that in a second, but let's keep that in mind. I'm going to come back to it. Factory, the machinery was worth $200,000, and then there is an accumulated depreciation of $2,000 at the end. Accounts payable, remember, we bought all these materials, indirect, factory supplies, and raw materials on account, on credit, so there's accounts payable. Capital stock is what we started, so we had at the beginning $100,000 in cash and $2,000 worth of machinery, all paid from savings, so all equity, there is no debt financing. And then sales, we were told it was $30,000, and cost of goods sold is 12,000. SG&A expense turns out to be 2,500. This is pretty much what you need to know for journal entries as well as trial balance. In the next example, I am going to continue with the same sample question, and we are going to continue with calculating cost of goods manufactured, income statement, and balance sheet.